Hello, everyone. Before we start, Eustace will mention a number of stocks that he holds within his portfolio. This is not a recommendation or even a suggestion to buy these yourself, so please do not take it as such. In fact, if you do wish to invest, I strongly suggest that you seek financial advice first. Now, onto the video. Welcome everyone to another of our weekly investment manager videos, and many thanks once again for tuning in. UK equities seem to be drawing a great deal of attention from global asset allocators as the UK leads the way in vaccine delivery. But should investors focus solely upon large cap stocks, or should an increase in their interest in their smaller company counterparts? Well, today I have the pleasure of discussing this and other topics with Eustace Santa Barbara, co-manager of the Marlborough UK Microcap Growth Fund. But first, before we get into the content, if you are enjoying our channel, it would be wonderful if you could subscribe. This really does assist us in delivering our financial planning and investment management content to a wider audience, and you would genuinely be helping us all that work behind the scenes in this channel. So onto the content. Eustace, many thanks once again for your time and being on the channel. First off, looking back over the last 12 months, how have UK small caps fared?
It's been a rather tumultuous past 12 months, but one of the really exciting things about investing in the UK smaller companies is the huge number of different businesses we have to choose from. We can select the most attractive opportunities from well over 1,000 companies, and they're operating in a very broad range of business sectors. So companies in some areas like hospitality and travel have had a difficult time because of the lockdowns. But other companies have been doing much better than ever during the crisis because they've benefited from the way people's behavior has changed. Lockdowns have accelerated trends that were already happening, with shifts in behavior that would otherwise have taken years to happen, occurring in a matter of months. We were already backing a number of these trends in our fund, and companies we're invested in have benefited from those changes. If we take the shift to more flexible working, for example, a lot of us have been working from home during the crisis, and in many cases found out we can be just as productive, if not more so. As a result, companies are realizing perhaps they don't need so much expensive office space in city centers and are reluctant to be tied into long leases. That's proved good news for one of the companies we hold in the fund called invesors. This provides software and IT solutions for flexible workspaces. These are the offices companies can lease month by month as they need them. Invesors has continued to grow through the crisis, and we think it's very well positioned for the future because this shift to more flexible working looks like it's here to stay for many companies. The pandemic is likely to result in many other changes to the way we live and work. And one of the great strengths of smaller companies is that often, because of their size, they can be incredibly agile. They can move quickly to seize these new opportunities. There's also a strong entrepreneurial spirit in many smaller companies, which are bringing highly innovative products and services to the marketplace. So we believe they'll play an important role in the UK's economic recovery. It's also important to look at the sectors in which smaller companies operate. About 70% of our fund is invested in AIM, the junior market aimed primarily at younger, growing businesses. And this is home to a far higher proportion of technology-led companies than the FTSE 100 and the FTSE 250. Many of these companies are strongly positioned to benefit from the acceleration in our use of technology in all areas of our lives. For instance, we hold GRC International, which is a cybersecurity group. We're expecting their services to be increasingly in demand as companies seek to protect remote working staff from hackers and other threats. We also see a bright future for Big Blue Broadband, which is a provider of super fast broadband to rural areas that badly need it in the UK, the Nordic countries, and Australia. While we're seeing a lot of interesting companies, though, it's worth pointing out that smaller companies can be riskier. If something goes wrong, their share price can fall sharply. That's why we hold around 180 companies in the fund, with relatively small positions in each one. This reduces the impact if an individual company runs into problems. That's a lot of stocks to look at, which is why my co-fund manager, Guy Feld, and I work with a large, experienced investment team of more than a dozen people.
Yeah, that absolutely. I think that breadth of, certainly the breadth of knowledge and experience that you guys have at Marlborough absolutely does come to the fore. We've touched, just before we started recording the video, we touched briefly upon the reopening of the economy. How do you see smaller companies reacting to that event?
It's an interesting one. I mean, after World War One and the 1918 flu pandemic, we had the Roaring Twenties, when people showed their determination to socialize and enjoy themselves again.
Mm.
Our view is that we could see something similar again when COVID restrictions are lifted. That's likely to mean people spending more money in sectors like hospitality, retail, and travel. We think this could be very positive for a restaurant company like Various Eateries, which we hold in the fund. They have two core brands, Copper Club, which are cafe bars with all-day menus, and Tavolino, which are Italian restaurants serving quality food at mid-market prices. Various Eateries has a very strong management team with huge experience in the restaurant business, and we think they're strongly positioned to benefit from that pent-up demand that's built up during the crisis.
Mm.
In the travel sector, we hold airline and package holiday company Jet2, which in more normal times flies from Newcastle Airport, amongst others. The company has a very strong focus on customer service, and this has helped it to grow consistently, and it's well placed to scoop up more customers after the demise of Thomas Cook. During the crisis, the company's earned a good reputation for repaying money for cancelled flights and holidays, and an independent survey ranked Jet2 and Jet2 Holidays as among the best companies for refunds. We think this will further strengthen customer loyalty, and that Jet2 is in a strong position to reap the benefits as people start jetting off again for some well-deserved sunshine. While risks remain, our view is that a full reopening of the UK economy should be very positive for many small companies that do most or all of their business in the UK. A lot of these companies have been out of favor with investors since the 2016 Brexit vote. So we think there are some very interesting opportunities.
Absolutely. And just a note, if you're going to go to Benidorm, once it opens up, you're going to go via Jet2. So
Correct.
I absolutely understand why you've got that. Finally, looking at the portfolio, how are you positioning the fund at this moment in time?
Yeah, I mean, we are favoring a balance of high quality growth companies we believe have strong long-term growth prospects, and some relatively cheaper businesses that have suffered during the crisis, but should do well as the economy opens up again. Mm-hmm. In both cases, we like to see companies that have carved out a niche for themselves. So they're providing a product or a service that's not easy to get anywhere else. One reason we like niche companies is because they should have some degree of pricing power. So if their costs increase, the company can edge up prices a little without their customers jumping ship and buying pretty much the same thing from someone else. Mm-hmm. One of the reasons we particularly like companies with pricing power at the moment is because a lot of money has been pumped into economies to nurse them through this COVID crisis. And we're definitely conscious that inflation could become an issue. It's something we're watching very closely. We've also invested in commodity companies because they traditionally provide a hedge against inflation. We're holding gold producers, precious metal companies, and copper and zinc producers. One of the things we're conscious of at the moment is a surge in merger and acquisition activity, or M&A, which began towards the end of last year. This is good news for investors in smaller companies because these are the businesses that tend to be acquired and generally at a good premium to their share price. So a surge in M&A activity tends to be positive for investors in smaller companies. So overall, in terms of the fund positioning, we're seeing plenty of interesting opportunities. And with the UK stock market valuation still low relative to historic averages, we believe the outlook for UK smaller companies is looking positive.
That's a fantastically positive way of ending the video there, Eustace. Once again, you guys at Marlborough have excelled at investing at stock picking and truly are that safe pair of hands, certainly for our smaller company allocation with our portfolios for our clients. So I'd just like to take this opportunity for thank you for your investment performance. Thank you for your time today. And I'm sure we'll catch up soon. You take care.
Thank you for having me. Thank you very much.